With the Dow still down about 910 points in the last, let's call it 15 minutes of trade, 14 minutes and counting. We've got Eric Friedman, U.S. Bank Wealth Management Chief Investment Officer. He's got $170 billion in assets under management. And we bring in our floor show traders at the New York Stock Exchange and the CME Group. Eric, let me start with you. Give me your sense of how you're looking at this sell-off of now 7 days straight, knocking more than $3 trillion off the value of stocks on paper in just those sessions alone.
Liz, it's certainly been significant, and we think the best way to contextualize this sell-off is to look at it in really three phases. The first phase is really a reactionary phase. So news flow comes out, and there's either buys or sells that happen almost instantaneously. The second phase is really more of a liquidity phase, where people are forced to sell positions they probably don't want to sell. So things like margin calls happen, and risk managers tap portfolio managers on shoulders, and sales happen. Then finally, we get to the fundamental phase, which is where a little more clarity comes in about the forward path and more analysis takes over. So we think we're really somewhere in between the first and the second phase right now. So we'd expect there to be a little more volatility. There probably will be some more downside, but there will be another side. It just doesn't feel like there's another side imminent right here, right now.
Yeah, I would say that's definitely true. Thomas Hayes, I want to get to you down on the floor of the New York Stock Exchange. We now have about 13 minutes left of trade after a very, very difficult 7 sessions for the bulls. Give me a sense right now of what you expect will happen. We're down 840 points. Do you see an acceleration to the bottom here?
Yeah, I think, Liz, here's a situation where Wall Street's throwing a clearance sale, and this is the only sale you can see that no one shows up. I think people are a little afraid to go long into the weekend, and it's a difficulty in quantifying the risk moving forward. But we had a similar situation in 2011 with the Euro crisis. Draghi came in and he set his bazooka up and he said, we'll do whatever it takes. What we need here is these drugs to come through the human testing in the U.S. We know we have the Gilead drug. It's going to take another 10 days to get the approval. And I think once people have that, they're going to get a lot more comfortable that the end is in sight. We can flush Q1, and we can look forward to earnings over the next 18 months. But right now, people are feeling uncertain, and there may be an opportunity to start nibbling and getting involved with some of the bigger stocks, the safer stocks that are down quite a bit.
As long as, Phil, people understand that this may not be the bottom, but
Correct.
You just scoop up each day, maybe a little bit here, a little bit there. Things are still on sale. But, Phil, I am in the business on the Claman Countdown with my entire team of giving people the facts. They don't like hearing that there are people dying, okay? We don't like that that's happening. It is a devastating and tragic situation, but it is true. So we know that suddenly when we're reflecting that and superimposing it over investments in the stock market as a business network, there's going to be supply chain disruption, then earnings are going to be hammered, and so on. Home delivery, meal kits, telemedicine, video conferencing, those are the names I would expect would be winners here, and yet there's so much red on the screen.
Yeah, and I think, there's no doubt the human impact of this cannot be ignored, and in the marketplace, I don't think we ignore it, in a weird way, we reflect that in our fears and the way that we react on the marketplace. I've been through many crises, September 11th, the financial crisis, but when there's human lives at stake, it does take on a different feeling. But at the same time, when you look at what's really going on down here, you also know that sometimes the fear is much greater than the reality. And even though we've seen a lot of deaths right now, and we don't know, where it's going to stop, the reality is that the deaths due to this is less than the flu, at least from what we're hearing. Now, we don't know for sure, but, there's more deaths from the flu every year. It's more of what we don't know that is causing all this market turmoil, and people may be overreacting. And, we're seeing that price in a lot of these commodities here right now, too.
Eric, once we get to the fundamental stage, and you talked about your stages here, what do you expect that investors are going to do, and what would be the sign to you that suddenly things might be turning around?
The biggest thing that we'd see in terms of a turnaround would be what CFOs are actually going to do with CapEx. That, for us, is the most important variable. Of course, the Fed, having functioning credit markets, very important. But ultimately, this boils down to what will companies do and what will consumers do? So we're in a really awkward shoulder period between just having reported Q4 earnings. We're waiting on Q1 earnings. Of course, we're still in the middle of the first quarter. So we're not going to hear a lot of positive news, Liz, but we do think that at the margin, if we see some stability of cases spreading, if we see some improvement, particularly out of China, particularly out of some of the areas like Italy that have had this virus more embedded in their system, that for us would be a good start. I think in terms of market levels, you have to really pay attention to S&P 2850. That's a key level. That's the October early lows. It also is a 50% retracement from where we had the lows in Christmas of 2018. That's really important. The other level we think is really important is 1% on the U.S. 10-year Treasury.
Okay.
We think it's hard pressed to get down to that level, but we have to see bond yields stabilize and probably start to pick up a little bit. Those would be things market tells that would give us at least a little more confidence than what the market is feeling right now.
Great to see all of you. Eric Friedman, Thomas Hayes, Phil Floyd.